Saying you want to buy a house on Long Island with zero down is like showing up to a poker game with no chips and a great personality. Everyone smiles politely, then takes your seat. Confidence isn't a currency, and charm doesn't pay closing costs. Let's break it down. So, what does no down payment actually mean? We're not talking about walking into an open house, pointing at the crown molding, and saying, I'll take it. We're talking about specific loan programs designed to reduce or even eliminate the traditional down payment. Here are the two main ones. One, VA loans. These are for eligible veterans, active duty service members, and some surviving spouses. They offer no down payment, no mortgage insurance, and pretty favorable terms. If you qualify, it's arguably the best loan product out there. Two, USDA loans. These are meant for homes in designated rural areas and for buyers who meet certain income limits. Now I know what you're thinking. Rural? This is Long Island. We have Shake Shacks. Beat. But yes, some parts of Suffolk County still qualify. That's it. That's the weird magic of Long Island. Let's move on. Now, even if you're eligible for these programs, here's the part no one likes to hear. Just because the down payment might be zero, doesn't mean your total cost is zero. You've still got closing costs, usually 2% to 5% of the purchase price, prepaid taxes and insurance, inspection and appraisal fees, moving expenses, furniture maybe, or at least a mattress that isn't still on the floor. And unless you enjoy getting emergency plumbing quotes while staring at your empty checking account, you're going to want a cushion. And no, your cousin Venmoing you $40 and saying congrats doesn't count as financial backup. Now, can you get the seller to help cover some of this? Sometimes, yes, it's called a seller concession. It's basically asking the other person at the poker table to spot you chips and fold every time you blink. It can work, but it takes timing, strategy, and an agent who knows how to make you look like a slightly underfunded dream, not a financial fire drill. Let's talk about how real people actually pull this off. Some tap into first-time homebuyer programs. These could be city, county, or even state-run grants. Some offer thousands toward closing costs or down payments, often forgivable after a few years. Others get gift funds from family members, which can be allowed depending on your loan type. But lenders have rules. There's paperwork, and your generous uncle can't Venmo you $5,000 and call it a day, unless your lender enjoys red flags. Even some employers offer assistance. It's not common, but worth asking about, especially in healthcare or public service fields. Still, every one of these programs comes with fine print. Some cap your income. Others limit what kind of property you can buy, and a few want everything short of your Spotify Wrapped. Now, is it better to just wait and save up a traditional down payment? That depends. If home prices and interest rates keep rising, waiting could cost you more in the long run, but buying without a safety net can also leave you house poor and wondering if you made a mistake. Here's the real answer. It depends on your situation, your income, your credit, your job stability, your long-term plans, and your tolerance for risk. This is not a TikTok trend you can just try and undo if it doesn't feel right in 6 months. So yes, it's possible to buy a home with no down payment. Just don't confuse possible with easy or smart or definitely a good idea for everyone. Because in real estate, just like in poker, you can go all in with nothing, but the house usually wins.